Bouvet Q4 2025. Bouvet sold down around 9% on their Q4 report and now trades at a share price of 50 NOK. The report itself was soft, but not terrible in my opinion. I believe the market sentiment is very negative at the moment and sells everything that doesn't surprise to the upside. This gives great opportunities for long-term investments. Bouvet saw a negative revenue growth of 3%. They face a tougher market and demand is somewhat weak at the moment. EBIT came in at 103 million compared to 119 last year, a 13% decline in EBIT year over year. The margin was 10.4% and last year's margin was 11.6%. The reason behind the weaker margin is a lower billing ratio due to the weaker demand. On a positive side, the company saw growth in employees of 13 people quarter over quarter and 7 people year over year. The lower recruitment is also due to lower demand and shows good operational and cost control. An increase in employees is important for the long-term story. Margins and customer demand might fluctuate, but a long-term positive trend in employees will lead to higher revenue and earnings down the line. All in all, it was a soft quarter, but still a strong margin, an increase in employees, and strong cash flows. Management is cautiously optimistic about the future. So what about the current valuation? At a share price of 50 NOK, the stock is cheap in my opinion. There's indiscriminate selling going on in the market, and companies are being punished for every single earnings miss. The market cap is 5.2 billion at a share price of 50. The enterprise value is 4.5 billion. EBIT for the full year was 470 million NOK. This gives an EV/EBIT of 9.6. The EBIT is slightly depressed in my opinion, meaning that the forward valuation is even lower. This is because an increase in employees doesn't happen without belief in future demand. The management is still positive about the long-term story. The free cash flow yield is now 8%. This means the company only needs to grow around 7% each year to give a shareholder return of around 15%. This is due to the capital-light business model and the ability to grow without investing or retaining capital. In the past, the company has grown stable around 10%. I believe Bouvet will return towards a long-term growth rate around 10%. The consultancy business is a bit cyclical and the sector is in a downturn at the moment. This will pass over time, but timing is difficult. In the meantime, the dividend yield is 6%, a very healthy rate. The business risk is very low and the comparables throughout the year will be easier and easier. I frankly believe that Bouvet is a very solid buy at these prices with low risk. The fears of AI may loom and bring down the consultancy sector as a whole. I believe this risk is a lot lower for Bouvet due to the low counterparty risk, diversified customer base, the split between sectors, public and private. The company has no debt, a great history, and now a low earnings and free cash flow multiple. The company is selling down along with the market as they didn't beat estimates, which yields a great opportunity for long-term investors. As a disclaimer, I own shares of the company. Thanks for listening.